be covering daily bias today and how to determine your bias. You starting using the daily. How's it going? I'll give everybody like a couple of minutes, maybe like at best like 3 minutes. See the message and get in here. Otherwise, whoever misses like the first few minutes is gonna have to look at the recording and catch that. We'll be going over daily bias, how to determine your bias based on what I've shown you so far, and how to use liquidity alone to determine your daily bias. It's pretty much just common sense coming from the education. And then it will be in the future introducing you to this, which is something that only the top 0.5% of traders use. It's about 88% accurate and works extremely well with the concepts that I teach, because the people who use it also use algo concepts about the fact that there's an algorithm that runs literally every market, cryptocurrency, stocks, all of that. People think that this is 1965 and people are sitting at a clunky computer manually, right? There's still some of that in the world, but mostly this year, institutions have fired the majority of their traders, 70 or 80%. Most central banks have. So that shows you that algos are being programmed to run the market instead of relying on humans to trade for these central banks. It's just much easier, and you don't have to pay anybody any salary. So they save a lot of money. All right, we're gonna get started. This would be going over daily bias, and there would be a bonus part of this video where I'll do a trade breakdown of a trade that I did take today on this exact same pair after I show you about daily bias, right? I'm gonna try to make this short and sweet, basically straight to the point. The first thing I do, I don't have any indicators on. Like I said, these are just for further confluence. I'll turn it on to look at it, and then I'll turn it right back off, close that. And if I have a confirmation that lines up with my bias from one of the the DR, IDR, or the Asian range being taken and things like that, then how's it going, Jake? Then I'll use that as context. You know, if Asian range is taken and I have my confirmations met for also for my DR, IDR, then that's double confluence, and that strengthens the trade up to about like 90 or 95% as long as you can get an entry. So trust me on that. We'll be covering that in the future. It's a pretty advanced thing, but how it works is pretty simple, and you can use it as confluence. You'll see if you apply it, you'll see what I'm talking about. So first thing, you know, the U.S. dollar has been mostly extremely bearish, actually. Let me actually show you something real quick in context with that in terms of fundamentals. The U.S. dollar, the United States of America currently is in a recession, and people were denying it for basically the last like quarter of 2022. I think this is 2020. What's the year? It's 2023. I'm sorry. I'm so tired. 2023. So in 2022, the last quarter, people were denying that there would even be a recession for the United States, but it's pretty evident looking at the economic reports that have come out. Certain things measure certain other things, and they're indicators of a recession. If you have all negative news in terms of your economy, then obviously you're not doing very well. So we're in a recession, long story short. Recently you had, and the USD is bearish, all the fundamentals are bearish. It's up top actually. Recently we had a buy side liquidity take right here, right? Daily buy stops were tapped into, and you kind of have to look and paint a picture, right? Based on liquidity and where liquidity is being drawn to, right? Currently, at the moment, nothing matters but where liquidity is being drawn to in the current moment on the daily. So if you have a confluence on the daily for a liquidity draw down or up, whichever way you're going, then that's more higher time frame context. And this is all you need. You don't need order block markups. You can literally just read price and liquidity and use the model that I've been showing you so far in order to get in to trades pretty easily. So we have daily buy stops right here that were taken. I'll put this in the middle, actually, way better in the middle. Daily buy stops that were taken right here, and obviously price came up and took those daily buy stops, which created the strong high. And we talked about that already, right? Created the strong high, right? The reason why this is significant is because, and we're going to be kind of using some things that I've already talked about just to show you how it kind of flows with what I'm teaching. Yeah, strong high created. Price did come back up and try to violate it, but I don't think it did. It sure did not. It technically created basically just equal highs right here, relative equal highs. You can see the wick didn't push above where this one was. So you had a strong high created, and then price started to chase some sell side after that, obviously, because if you take buy side, they have to grab some type of sell side after that, right? Before every sell that happens in history of ever, it's going to be a buy side liquidity take. Before every buy, it's going to be a sell side liquidity take. So if that has not happened yet, they have not traded below old lows for a buy or old highs, swing highs for a sell yet, then it's not time to enter that trade yet, because what's going to happen is you're going to choose an order block, you're going to set a limit order, and because you haven't seen that confirmation happen yet, you're going to get taken out of that trade, right? 9 times out of 10. So they started immediately chasing sell side all the way down to today, which would be January 18th. January 18th, right? So relative to this entire impulse move, you can see that they're obviously chasing sell side. They're chasing the USD is bearish. So long term, if you know how liquidity works, right? You had price clearly chasing buy side all the way up to here. Price came back down, chased some sell side, and then had a liquidity take in order to post a continuation of the overall trend, right? So with that being said, the next available thing, right, that they have to do, let me actually change this. Is continue to chase the sell side, right? For long term, you can see why they're chasing sell side. Drop a one in the chat box if you can see that, all the way down to this low right here. And I'll mark that up. It's like your super bigger picture for your daily context, right? But you do have to still zoom in, right? So the best thing to do is zoom out and look left, right? I always tell people when in doubt, look left, because they're going to be coming for some type of liquidity to the left, right? In this case, for this buy right here that happened, the liquidity to the left that they were taking was in this impulse move, and it just continues like that, right? So daily sell stops were right here, not buy stops. Daily sell stops were right here, and you had basically price continuing down. So now I need to look at some old lows right here to see where's the context for price and where it's chasing liquidity right now, right? Given that, right, we know the USD is overall bearish. You know the USD is overall bearish, and you know that price has been taking sell side liquidity. So they have seemed to have taken liquidity all the way down to this current low right here, right? Drop a one in the chat box if you can see that. That's the lowest low that they've taken out so far. This is the first thing I do. This is just a sell example. I will go over a buy example as well. So I look at what price has done currently, right? What's the latest thing that price has done? The latest thing I've seen that price has done is take out this exact low. It didn't trade below. It didn't trade it below this low right here. It traded below this low. So now I can expect, since there's a recent sell side take right here, I can expect some type of retracement, but eventually there will be a continuation. I got to put the daily in my bad. Daily sell stops. So yeah, daily sell stops right there. I like to have make my thing, my horizontal array pretty thick, just to because I like to differentiate the daily. Where's it at? The daily time frame sell stops. Here it is. Put it on 2 because that shows you that this is a higher time frame. I know that's just how I personally think. And then if I'm gauging liquidity on my entry time frame, I make it just the smallest it can be, right? So it's like bigger time frame liquidity, and then lower time frame liquidity is skinnier, showing representing that. So you can think of it however you want to, but it's just a tip. So now the last thing that happened was right here, a very recent sell side liquidity take within this impulse move down, right? So that this last up candle right here is going to be the order block, right? Somewhere within this last up candle before the liquidity take, right, is going to be an order block. So since there isn't a bearish engulfing, this is going to be the last candle, the last up candle before the actual liquidity take right here is going to be your order block. So somewhere within here is going to be your bearish order block. Drop one in the chat box if you can get that. Yeah, we would have to drop time frames to see. So that's how order blocks work in terms of if you don't have a bearish engulfing. As you can see right here, there was a bearish engulfing right here, but then it got respected nicely in order to post a continuation, right? So you got a break structure right here, bearish engulfing, that was responsible for the breaking structure got retested. Price came back down, took some more sell side right here, and now, right, since we never got bearish engulfing quite, this last bullish candle is going to be the order block, right? So I'll actually highlight that just in case I want to reference it later. Highlight that individual candle. And yeah, we're gonna keep that blue. Don't want it too large. If you put it too large, it'll you won't be able to find it later. So we'll stay in that candle. So since they recently took some sell side here and here, some more major sell side for them from this impulse move to the left, right? You can see and you can expect some type of retracement. So what I'm looking for here is within this impulse move that happened, is there any institutional footprint, right? So at that point, I usually start dropping time frames if I don't see like a daily fair value gap or anything that would be obvious. I go to the 4 hour, and this is that same daily candle right here, right? Nothing's changed, right? The 4 hour, is there a fair value gap or some type of institutional footprint in premium territory in this case? And I'm gonna change this template. That would be in premium territory. That would be a good order block, right, in order to use. So one thing right, because this is all still daily liquidity right here on this red horizontal tool, is that there has to be a buy side take, right? What's above where price is currently? There's a high right here. It's a major swing high. So I that's going to be obviously taken out. Drop one in the chat box if you get that. The next, when you're looking at liquidity, you're looking at swing highs and major swing highs and major swing lows, right? That's where the liquidity is going to be resting. They're going to make that big. That's where the liquidity is going to be resting. It's not the little small moves in between, but the major swing highs and swing lows, right? That's where liquidity will always be resting. And you can see how it kind of computes. And that's what I mean by old highs and lows. I don't mean the little tiny ones in between. I mean like the major swing highs and swing lows. Exactly where liquidity is going to be resting every single time. In this case, I'm going to mark up a few, obviously. So that's where liquidity is going to be resting, right? They just took sell side on the daily, right? And I could mark that up too. The very latest thing that happened was pretty much like a double sell side take right here. Drop one in the chat box if you can see that, right? So the next thing that literally has to happen is some type of buy side take. And buy side takes is going to trade above some type of high, right? This is that high I was referring to. Boom. Change this and duplicate it, and then you have daily buy stops right there. There's liquidity resting above the swing high. What's currently happening after the sell side liquidity take? Bullish order block that did close and is currently being respected on the 4 hour as a result of that daily sell side liquidity take. Not a coincidence. For every sell side take, there has to be a buy side take. In order to have that happen, the algo has to buy up and take out a high. Drop one in the chat box if that makes sense. This is me breaking down the daily down to even to the 4 hour, right? Daily liquidity down to the 4 hour, right? So we're still inside of this current daily bullish candle that's retracing, right? So now that price bounces back and forth between buy side and sell side, and that it's only the swing highs and swing lows. I'm not counting anything else, just this liquidity on the swing highs and swing lows, right? And I could mark this up. You can see what's been happening. We had a price trade above right here, price traded above right here, and then it's literally exclusively the swing highs and swing lows, right? So let me mark up some of this liquidity so you kind of have a bigger picture. Let's do some of the swing lows at first. That's sell side liquidity right here. Actually, no, I'm gonna use the daily template. It's just actually no, that's fine. That's fine. You can see it. So you can see that every time they took sell side, they only came for swing lows. See, they only came for swing lows every time. When they come up for buy side, they only come up for swing highs. So the next available buy side take is going to be this immediate swing high right here. And this is just breaking it down from the 4 hour. Sometimes the daily is not pretty, and you just have one solid big blocky candle. Sometimes you have to look inside of that candle to really see liquidity break down. And if you don't see anything on the 4H, you can always drop down to the 1H. It just gets clearer and clearer as you drop time frames if you don't see something immediate and crazy on the daily. So the next thing, since they just took sell side right here on this swing low right here that I have marked up, right? And they took some major sell side right here on this impulse move to the left. The very latest thing that happened was a sell side liquidity take. Now you can expect a 4H maybe buy side, likely into this order block right here, let's just say. Is this what's resting above the liquidity? An order block. So you can mark that up, right? Sorry about that. If there's any noise when the actual video plays, it's pretty good at filtering out noise, and it's got like a AI setting on here, so I'm not very worried about minimal noise. Usually tunes it out pretty good. Let's put that somewhere where we can actually see it. Let me see. Top. All right, so I usually, if you don't want to mark up, like use a rectangle tool, you can also use this. You can either mark up, because these buy stops are exclusively right here on this high. So let's move that over so we're not confused. And you can either put it on the open of the bullish candle, which would be literally right here, or you can put it at equilibrium in the middle, because normally 9 times out of 10 equilibrium gets tapped, and just mark it up as an order block. You can make it thicker if you want to, but it's kind of how I keep my charts minimal in terms of like things on my chart, so I can see more actual candlesticks and how liquidity and a price action is moving after liquidity takes specifically. So like for this, you could buy price up right here, right now if you wanted to. You can see that this order block is being respected, right? And let's do the same thing here. You can see this order block is being respected right here. And for a fact at this point, because like how liquidity moves is a fact. It's all about whether you're able to execute on that. I was so angry today. It's all about whether you can execute on that, right? You can see that this order block is being respected at the open, or my bad, at the close, because this would be the open. Yeah, at the top of this bullish candle here. Super tired. I'll go ahead and eat sleep. So you can see that this order block is being respected, and you can use that, or you can use the equilibrium. Can you give him this bottle, please? You can give him. You can do the equilibrium as well. So it's really all up to your preference. If you've back tested and you've seen that equilibrium gets tapped more often, or you can do a more aggressive entry at the top of the wick, and that oftentimes gets tapped too. But you can never go wrong with having a stop loss behind where the liquidity take happens, because that just proves that once again they don't have a reason to come back down here. So it's you're just wrong on the trade and probably gauge liquidity wrong if you have the low being taken out, right? Since this is a major sell side liquidity take, this is a temporary strong low. Drop a one in the chat box if you get that. So if you're trying to buy this back to the upside, you can use that temporary strong low, right, as a buy opportunity. But knowing that these daily buy stops are going to be taken pro trend, and then it's going to have a continuation, and then eventually this temporary strong low will be violated and be a weak low. So that's kind of how you use liquidity to make money both ways. You can sell something and then buy it right back and have context behind that, right? Drop it in the chat box if you get that. As long as you have context behind your trade in terms of liquidity and the actual candles are printing and it's being respected, execute on the trade. There's nothing else to say. You'll be wrong sometimes, but that's fine. It's just practice. Even if you want to only do counter trend trades on a demo account for now, so you get really good at it, that's fine. But this is a way to read liquidity and kind of just show the story, right? So as for the short here, because the USD Swiss franc is obviously short, I would wait for a price to take out this liquidity and count on this order block to be respected. And if this order block doesn't get respected, this one for sure will be respected. But I do believe this one will be respected because it's the one directly above liquidity. Yeah, it's if you once you know like kind of like the liquidity matrix in a way and how liquidity moves, as soon as you see what price is doing, you're gonna immediately know what with a 90% certainty what price is going to do next. So that's how you create daily bias, right? I use the daily candle and just the daily. Yeah, man. Once you get into the flow, it's over with, man. I swear. So I've used the daily bias, you know what I mean? A daily bias of chasing the sell side and confirm that with some just, basic liquidity knowledge, and then drop down to the H4 just because the price, it wasn't clear. and showed you how liquidity works even better. Last thing that happened was major daily sell side, minor 4H sell side liquidity take, all in confluence in context with all in context with how liquidity moves. So you have so much confidence for this trade right here. Let's just say long. And then when this buy side liquidity take happens right on this major swing high until this order block, it could be this order block too, because this order block got respected is really hard. So it could trade above this wick, but that's why you would have your stop loss behind the you can put it behind the order block, or you can put it behind the last liquidity take, but price should not violate no more than this, right? That's why you have your stop loss in place, because you're saying I'm willing to weather this many pips, risking 1%. You know what I mean? So sometimes you might have a 0.5% drawdown, and then it might tank into profit. You know what I mean? That's fine. You're not seeking perfection. You're seeking proper execution at the right time so that you can profit, right? No one's perfect. I lose on trades all of the time, but I have a positive risk to reward ratio and confidence in my knowledge, right? Some months I might be minus 2 or 3%, and some months I might be plus 25 or 30%. Trading, it does, it is like that. Some days you'll have negative weeks where you're negative 2 or 3%. It's perfectly normal. The people who make money in this industry have good psychology, right? They don't need to impulse trade. They're not trying to blow their account up in one day. They have good risk management and a good average risk to reward of at least 1 to 3, right? So your losses will average out every time, as long as you have knowledge and a trading plan in place when you go into the market, right? So now, right, naturally, I'm looking for buy side to be taken up to here into one of these order blocks, right? If you wanted to be, because these both of these order blocks are above the most recent daily buy stops, and they're in premium territory, right? Drop a one in the chat box if you get that. My only choices are for bearish or order blocks in premium territory. The only choice for longs in discount territory. Where's price right now? Price is deep in discount territory. That's also more confidence. So since you get that, let's go to move on to the actual trade that I took for 2 entries. Liquid, what was it? And this is gonna look pretty crazy because I have a lot of markups on here in terms of like what happens. There you go. Finally, this looks crazy, but I just gotta zoom in. So this was based off of the daily sell stops like I literally just showed you, but then I waited for the 1H, zoom in a good amount so that you can actually see the candles, because this is more because I entered on the 5-minute based off of this, right? I saw that the 1H had real quick had Asian session highs traded above, right? I also saw that there was and I'm gonna turn this off real quick. Because this indicators is just for more confidence. It's been proven that when Asian highs are taken, the alloy does a continuation from there 9 times out of 10. I also saw that price came up and it mitigated this order block on the 1H and traded above this high as well, taking Asian range too. So that was what I needed, right? I knew at that point that price was coming up. It already took out buy stops into a 1H fair value gap, right, in premium territory. That was my context for the entry. I used the 1H to enter on a 5-minute. Boom. Fair value gap in premium territory. So once I saw that was going to be a thing, I basically waited for, Control Z, a bearish engulfing close, order block close after the mitigation. Once I had that, I dropped down to the 5-minute. Drop one in the chat box if you get that so far, that part, the 1H part. You already get the daily perspective because I just explained that. So as to why the draw on liquidity was, right? So after I dropped down to the 5-minute, I actually saw, let me zoom in, this 5-minute fair value gap right here between this candle's close and this candle's open, right? This bearish candle's open, and then this bearish candle's close. There was a fair value gap created at the point of price coming up and getting into that and filling that fair value gap, right? Price, I basically did a market execution right about here. Price came up and wicked out a little bit, filled a little bit more, and then dropped, right? Then I had a little bit of drawdown here, about a 0.5%, 1/4%, something like that. I know it was a 1/4% because I only risked a 0.5% on this trade. Should have risked more, honestly, but it's all good. Price dropped at that point and took sell side because what was the last thing that happened, right? It was buy side. Do you see the buy side right there? Buy side liquidity take right here happened into the fair value gap, right? Drop on the chat box if you can see that. We're gonna focus on one of these at a time. Because it looks crazy. We're gonna focus on one of these at a time, right? So I had Asian highs taken. I gauged that there's an 88% probability based on the DR, IDR, Asian highs taken, and then the actual daily draw to liquidity. So after buy side was taken, I marked that up and noticed that price did end up dropping after that, obviously, to chase what was next, which was sell side. So price created sell side, rallied back up, and then took it, right? At that point, I knew I was correct on the trade, right? Price came back up again after that. Let's see, Control Z. So I'll delete my ratio tools off to be clear. Price came back up after that, and I was wondering, was price going to have a continuation from here? And essentially, I saw a 1 minute supply close right here, order block close right here, thinking that they were going to just respect that. I also marked up a 1 minute fair value gap, and this is where I got my second entry. They did not end up respecting that. They ended up using that as liquidity. It basically filled this fair value gap, 1 minute fair value gap, and I'll show you that. I know this looks very crazy, but after you've marked everything up that's happened, you can get kind of. I just focus on one part at a time, right? You can see this fair value gap between. Where is it? Let me move this over a little bit between this candle's close and this candle's open, right? There was a fair value gap. Drop it on if you can see that in the chat box. So I dropped down to the 1 minute. It was like, bet we're gonna see if they take this buy side, and this one other block is respected. This is the one that I thought was going to be respected. So this is the last 3 up candles in this impulse move before the drop, because the drop did take some sell side. That's why I thought it was going to be valid, which it's a good thought process for sure. Price did end up using that as liquidity, but my stop loss was already behind these highs, so I wasn't very worried about it. It filled the 1 minute fair value gap and then dropped. So going back up to the 5 minute, scroll over, zoom into the part that I was last on. So it's that same 1 minute fair value gap. I basically wanted to see if why price rallied up like this. And I looked over and I saw that via this impulse move, right? These were all old highs. I should have known that they were going to be taken out, but human error. They took out the old highs, and I typed in 1 minute fair value gap respected plus 5 minute order block respected. Well, where's the 5 minute order block? The 5 minute order block is this last up candle right here. I'm gonna change the color of that. This last up candle. That's so like gross. That color is so gross. I can't do it. Okay, so this is the last up candle before the drop, right? The reason why this is significant, right, is because this was the last up candle before price took liquidity. You can see right here, price took liquidity. And that's why this is significant. So I did draw in that order block as well. And you can see the markup right here. I just use the horizontal red tool. I just marked up the open. So I filled the 1 minute fair value gap and taps perfectly the last up candle before the sell side liquidity take, right? And even had a continuation from there. So I knew that the next thing that price was doing, or I should have known at the time, my stop loss was where it needed to be, that they were going to come take some buy side, sell side, buy side every time. Sell side again, right? Down here. Sell side again down here. What happened next?
Wouldn't it be funny if this night was the last time we ever talked to each other?
Hey, no, but can we talk about this one, y'all? Because as heartbreaking as this video is.
Okay, sorry about that, guys. I'll edit that out. It's fine. I'll make a funny out of that one. What I like to do sometimes make people laugh. So the latest thing, I'll make a funny out of that one, like I did with the Step Brothers one. The latest thing that happened was a sell side liquidity take, which was right here, right? So what literally has to happen next via how you literally have seen with your eyes, buy side. So price came up, rallied up, and basically swept some buy side, and that would be this old high, lower high right here, right? Right here was a buy side liquidity take. Get out of here. That's fine. I'm almost finished. Drop one in the chat box if you can see that. That old lower high right here. Took it out into what? Into that 1 minute fair value gap. So after that, price dropped again, right? I'm just literally following liquidity and drawing in the fair value gaps. If I was not on the 5 minute and I need to see why this dropped so hard, I go down to the 1 minute. The 1 minute always has some type of footprint, right? After that, I'm gonna delete this for now. Price did fall. After I took buy side liquidity right here, which I'll mark that up real quick with one of these. Price did take a buy side liquidity right here into the 1 minute fair value gap, dropped down to here. My target, and I would have reached it. I was going to close here when it took out the lows to the left here, the sell side liquidity on this low right here. Because if that's what they're chasing, all you have to do, your target should be based off liquidity. All you have to do is look left and look at all the lows right here, right here. These were generous targets that could have been had, but volatility was not the best today. So after that, price came down, took sell side again, all the way down to my target. I actually ended up closing somewhere actually right here after this sell side liquidity take happened. And then once again, what's the next thing that literally has to happen, right? Literally has to happen, right? So price created equal lows right here. You can see that right here. This wick and this wick are almost identically equal. Drop one in the chat box if you can see that too. Almost to the pip, almost. It's not a coincidence. So I noticed that, and I was like, thinking to myself, they're definitely coming to sweep those equal lows. Anytime you see extremely equal lows, relatively equal lows too, but like extreme equal lows, where it's almost identical to the pip, they're coming for that. I was correct. Price traded below, and this was obviously put prior. Price traded below, and I knew after that the next thing that they were going to have to do was take some buy side, but it was getting later in the day, and I didn't want to get taken out by spread, so I closed with like 1.3% profit overall, risking 0.5%. But this was 4% potential profit, right? As the volatility returns to the market, then these types of trades will get better, where I'll be able to close 4-8%, which is 2 entries, just following liquidity, right? So my second entry was after this 1 minute fair value gap was mitigated, and I let price drop basically and go from there, right? The next thing that they have to do is take some buy side, right? Where is the buy side, right? All of these, because technically relative to this order block right here, all of these right here are lower highs to the order block, right? You be able to look at price action differently. Drop one in the chat box if you get that. That all of these right here are going to be lower highs to the order block extreme, right? Why is this order block significant? Because it was responsible for a sell side liquidity take. So that's an institutional footprint showing you this is where we're selling from, right? What happened after that, right? Price came up, kept breaking structure to the upside, taking buy side liquidity into this 5 minute fair value gap that was actually created. My bad, let me scoot this over. Into this buy side liquidity take. I would say buy side liquidity stops right here on this last high. That's where it kind of stopped it. Let me move this to the right. That's where the buy side liquidity stopped. I can make that a little thicker too so that you guys can see it better. That's where the buy side liquidity stopped right there. And then the fair value gap was created. My idea what would have been for a third entry, and I'll cover the 1 minute fair value gap. And sometimes you're wrong, you know what I mean? Sometimes things get violated and you have to adapt, which I did here, because you already knew you're right on direction. What happened was I looked into this for a third entry, but it was getting kind of late. You had a 1 minute fair value gap that was right here that I expected to get basically filled. 1 minute fair value gap was right here. I expected it to get filled and have continuation. And basically, I was going to use that 1 minute fair value gap to get an additional entry after the buy side liquidity take. But once again, it was getting pretty late, so I didn't want to really add another entry. I ended up closing like 1.3% profit. But from here, obviously, it's a buy side. The next thing it has to do is chase sell side, but you got to confirm that first, right? Once it trades below a candle, like a wick right here, it's confirmed that they are indeed chasing buy side. So you can use that as context as well. And I caught a decent amount of this move from up here to down here. Now, if I had a better risk to reward, this might have been 3%, 2 or 3% from here to here or something like that. But my overall target was more down here, based on, delete this, based on the daily sell stops, in which I was using in pretty hard, in which I was using the open of this candle down here. Come on, scroll down. I was using this basically the wick of this bearish candle right here for a potential target, right? When volatility returns to the market, these types of trades would be normal. You can use a daily, daily lows of the candles as targets. Drop a 1 in the chat box if you have gotten a revelation from this live in terms of liquidity and things like that. If you didn't miss the first part, that's fine. This is gonna be uploaded. I will drop the playlist as well into the group after this live. I forgot to the other day, but mark up what happens. I do this all the time, right? Obviously, all of this wasn't here before. As price happened and as I saw the things happen, I marked up. Boom, this happened. What to expect next? A sell off. For the context is the daily fair value, daily draw on liquidity, and the daily fair value gap, or I mean the 15-minute fair value gap, or my bad, the 5-minute fair value gap. The 5-minute fair value gap that was responsible for the sell side liquidity take right here. That just confirmed to you that they are indeed chasing sell side, and all you have to do, nice. All you have to do at that point is just execute on the trade, right? There's no guesswork in it, right? You still will be wrong sometimes, but once you see confirmations, all you have to do is execute. If you want to wait for additional candles, that's fine. But in this video, the last a few minutes of this video, we're going to be covering real quick, right? And drop it in the chat box if you get that, right? If you get all of that. Right. So that's dope. Make sure you take notes and apply this to your trading too. So how do you know when they're chasing sell side and or buy side officially, right? As soon as, because like liquidity is all the swing highs and swing lows, right? So in this case, on the 5-minute, this would be a swing high. My bad, this would be a swing high. This would be a swing low. I would consider this a swing high. The lowest wick was going to be the next swing low, and it just keeps on like that for a long time. Swing low, swing high, swing low, swing high, swing low, swing high, swing low. And you notice how I'm pointing to the wick: swing high, swing low. It goes like that. Once prices trade the below, as you see here, done in my crosshairs, once price trades below, that's it. They're showing you their hand. You have context for your fair value gap, wait till it gets filled. Once you see some good price action, execute on the trade. Or if you wanted to, you can wait for another sell side liquidity take to confirm the area and then get in again at inevitably another institutional footprint. Because somewhere within this leg is going to be a 1-minute fair value gap. Context is that it did continue to take sell side. So now you know exactly where price is going. And all you have to do is find an area to enter and then execute on that, which would be within the impulse move that took liquidity, obviously, via the rules that I've given you. Drop one in the chat box if you get that. Perfect. Do you guys have any questions over what we covered on how to get daily bias, right? You're just going to look at liquidity and gauge that. Where is the daily drawing? Is it drawing to the downside or the upside? Is there a possibility of retracement because recent sell side was taken? You know what I mean? And if so, is there an institutional footprint that it would be going into? And in that case, you saw me, you're going to have to drop timeframes 9 times out of 10 and find that, right? Other than that, this is how you get your daily bias. This is pretty much how I go through my charts to look on the daily, and I go down from there. So I'll drop the playlist in the group. I was having troubles with the day one. I'll re-upload that. But if you guys don't have any more questions, that's how to use the daily to get your bias, your draw on liquidity. All right, guys. I'll see you guys in the next video. That will be tomorrow. You can do the same time if you guys are free. Let me know. All right, see you guys tomorrow. I'll kind of talk to you guys in the group tomorrow to see what time you're available. All right, see you guys later.